private limited company is a legal entity separate from its directors. It means that you, as the company director, are not personally liable for company debts. This is hugely important when deciding what legal form of trading to choose for your business. So, as I already said, as a sole trader, you have much greater responsibility for your debts, and your personal assets are in danger. So, obviously, it is more credible to trade as a limited company. They are seen as more trustworthy. However, the benefit of limited liability does not come totally free. In exchange, you will have more reporting and filing obligations in comparison with the sole trader. Rules are actually quite strict for limited companies, and non-compliance can really be costly. So it's very important to be on top of all your filing deadlines. Next point is about filing annual returns with CRO office. So as we speak about your reporting obligations, limited companies have to file annual returns with company's registration office, not only with the revenue. This is the major difference between trading as a limited company as opposed to a sole trader. These returns consist of some secretarial information about your company and also include annual financial statements, which are balance sheet and profit and loss. Every company has its so-called annual return date. This date is no later than 9 months after the financial year end. However, the first annual return is due 6 months after the incorporation. Then the second one is due 12 months later. So 18 months after the incorporation date. Most probably, I would say that 99% you will need to engage an accountant to prepare your annual financial statements and to file your CRO returns, because it is really more complex as doing accounts for the sole traders. There are certain rules, there are accounting standards that need to be adhered to, there is a certain format for the financial statements, and actually only someone with the accounting knowledge and background will know how to do it. And that's, again, the major difference between trading as limited company and as a sole trader. Again, it's very important to remember the filing deadlines, because many startup companies miss them. The first one is just 6 months after incorporation, and this one is most frequently missed. If this happens, you will pay late filing penalties, which are €100 per day or so. And on top of that, you may lose your audit exemptions, which is very important, and you will have to engage auditors to examine your financial statements, which is really costly and painful, and you don't want to do it. So be on top of your deadlines. The last thing I would like to highlight here is filing your corporation tax return and paying taxes for your limited company. Similarly to annual income tax returns for sole traders, a limited company has also filed its annual tax return, corporation tax return, to the Revenue Office. So you have two institutions to file your, to report on your activity. One is company's registration office and the other one is the revenue. The filing deadlines for corporation taxes are similar to the annual return deadlines, which are 9 months after the year end, by the 23rd day of the month. Usually the accounting year end is 31st of December, so your corporation tax will be due on the 23rd of September, the following year. Also, the tax payment date, the due date is at the same date, 23rd date of the 9 month. And similarly to sole traders, you will need to pay your preliminary tax at the same date, so a similar situation. Similarly to sole traders, late filing penalties can be really high, up to 10% of the tax liability, which can be even 63,000. That's the upper limit.